Jeez. Ladies and gentlemen, welcome back to another crypto market update. Today is December 30th, 2024. Foul year of our Lord. It is the second to last time that I will have to utter the name, the letters of that year. 2024 is almost gone. I hope you guys had a fantastic Christmas. I hope you guys were able to, what's the word? Have some reconciliation of your personal life, of your work-life balance. Hopefully, you weren't just glued to Twitter, whether you were watching the erupting battle over the H-1B visas or whether you were watching the absence of eruption of Bitcoin's price action, which has changed a little bit in the last 4 hours. We have seen volatility come into the market. We talked about that in the Alpha report that went out just a while ago. But either way, we have a great show for you guys today. In today's episode, we're going to be talking about the devilish, fear-mongering, doomish pattern, might I speak of the head and shoulders that infamous traders such as Peter Brandt, Eric Crown Crypto are talking about now. We are going to be talking about my timeline for the resumption of the bull market based on my inflation calendar, based on my inflation model, based on my analysis of how Bitcoin's price is very much tied to the monetary policy of the Federal Reserve. So we'll be talking about that. We're going to be talking about alt season. And I have 3 question marks next to alt season on my paper. We're going to talk about that. So far, we have been seeing altcoin price performance outperforming Bitcoin in the short term. We have seen some strong bounce backs, but we're going to be talking about that. We're going to be talking about AI agents, which you cannot be ignoring any longer. You've been sitting there, you've been watching virtuals go up, and you're telling yourself, all right, well, virtuals is like up too high. I probably shouldn't like jump in, but what if it goes to like a $30 billion market cap? Am I really too early? And then, you know, all the numbers. We're going to be talking about that. We're going to give you guys a quick update on Spore, which is something I called for the Crypto Trading Academy for the members on Thursday. We're going to be talking about Bitcoin. Can we push to 97,000, 100,000 overnight? If we have time, we're going to be talking about the H-1B visa debate because I've dived into this quite a bit, and I'll give you guys my hot take. But other than that, if you guys have questions, comments, concerns, sarcastic remarks, death threats, or hot stock tips, please put them in the chat. I'll be glad to get to your attention. We do the show Monday through Friday, typically from noon to 2. Of course, starting a little bit later today because I had to go get better health insurance this morning. I am now officially in the marketplace, you know? I didn't think I would do it. I've had private health insurance for a while, but believe it or not, and I went through all this just last year, right? With the healthcare.gov, with the marketplace. Is it better? Is it not better? And guess what? Something amazing happened today. I ended up getting the health insurance that I wanted, that I dreamed of, for less than I'm currently paying. So I've got much better coverage for my daughter. So hooray to that. I'm not against government programs. I would actually rail against the Affordable Care Act, aka Obamacare, but I am a person who needs to act in my own self-interest. So I will say it is the first time that the marketplace has actually beaten what I was doing privately. So, okay, you know, like, no, not bad. Okay, cool. Again, the problem with government programs is that you remove the natural incentives for free market competition. Regulation disincentivizes or actually crushes free market competition, which drives prices down and delivers a better product to the consumer. It's always difficult because people, like I just said, are always going to vote and act in their own self-interest in the short term. And it takes a certain level of wealth, it takes a certain level of prosperity to start making those longer term decisions. That just seems to be the case. It's very difficult for individuals to make decisions that are going to be good for them 6 months, 12 months, 5 years, 10 years out the road when they're really concerned with, you know, what's going to be good for me in the next 4 hours, 6 hours, 12 hours, right? So that's short-term thinking. We all know that that is one of the biggest inhibitors to long-term success, particularly with finance, particularly in trading, but that is the nature of the world. And when you create a government incentive, when you create this disincentive for free market competition, when you allow these government interventions, it just makes it so difficult and painful eventually to get people off of the addictive drug of government support and help. And it just creates a big mess of things. So all that out of the way, we've got a few things to talk about. Just want to remind you guys that all annual and monthly memberships to the Crypto Trading Academy are 30% off with discount code SANTA. That's SANTA, all caps SANTA. At checkout, get yourself 30% off all of our automated strategies, all of our coursework. Learn how to build a profitable strategy from the ground up, whether you don't know anything about trading, whether you don't know anything about coding. All of that is available. Also, final plug before we get into the show, we are now syndicating our crypto alpha report via email. Didn't actually go out today because I was really pressed for time. It went off on all our normal syndicated channels, though. You can get it on TradingView. Obviously, the private members get the full unlocked alpha report every single Monday. You can read it in our Discord. You can read it on TradingView. You can read it on X. But now you can read it directly from your mailbox. So all you have to do, go to krakencryptocurrency.com. Pop-up will come up. You can enter your email. We won't mark it to you unless you ask us to. We will just send you that alpha report. Okay. All of that out of the way. Shout out to the early chatters. Just B-flow and freight trades today. I get it. It's a slow day. It's okay. The people will come. If you build it, they will come. It's all good. Let's get started off as we are wont to do. Let's just check in with Bitcoin real quick. And we'll talk about the biggest scuttlebutt. We'll go over all of this, and then we'll get into the macro. So we do have that bullish 5-minute trend. We do have on the 30-minute time frame price breaking above our momentum bands, breaking above our guppy EMAs right now, hitting the value area high of the day so far and pulling back. I doubt it would be nice. It would be really nice if we can hold on to that 5-minute momentum. Time will tell. 30-minute momentum does want to see price come back. We'll expand that here in a little bit. On the hourly time frame, we did have a nice big surge of volume and 2 nice hourly candles coming off the bottom. So I'm not going to lie. I don't want to just be calling for, the pump every time. It's probably not going to happen. We don't really need to be worried about price pumping when all of our EMAs are crossed under. Okay. So this is very easy. It's kind of difficult. People are always like, oh, they get scared when Bitcoin's price goes down, because obviously if they're long or if they're holding, obviously your investment is going down. The price of your trade is going down. You might be getting close to your stop loss, to your liquidation, whatever have you. But see, everybody, when they go to trade, I talk about this so much. People get their investor hat and their trading hat. I got to flip the music on. If it's too loud, you guys let me know. People get their trading hat and their investment hat just so, hold on a sec. I got to put audio output capture and Winamp music, and that is muted. So we can really kind of push that bit up right there. All right, let me know if it's too loud, please, please, please. I am not monitoring the audio. Oh, I see Losirus over on Rumble. Good to see you, my friend. Now, people get their investment and their trading hats completely mismanaged when it comes to Bitcoin. I've never seen this happen on any other asset. I never saw this in traditional equities. I never saw this in the Forex markets. And it's because Bitcoin is the best performing asset of the last decade. And it has this tendency to just put in these ginormous pumps out of nowhere. So the problem is when price goes really, really down, people are so obsessed with A, not wanting to lose money, okay, but B, they're obsessed with getting the best price, because if I don't get the best price, if I'm gonna miss out on the pump, and not, here's the thing, I just want to make it very clear. There's kind of like, there's 3 main styles of trading, all right? Obviously, there's trend following, there's mean reversion, and then there's reversal trading, which is kind of the high risk stepbrother of mean reversion trading, but I digress. And so when people are really, like right now, when people are angling for price, they're really obsessed with getting a low price. And there's nothing wrong with that. It's good. But the problem is where a lot of people get into trouble is that they'll look at price action like this, where we're not bullish. This is the 4-hour chart. This is one of the best charts to follow in crypto. We look at all this. All right. Throughout this entire period, all right, Bitcoin is above the 4-hour momentum bands, meaning at pretty much any time you can go long. Okay. There are other considerations you can take in to kind of give you a cleaner entry. Like obviously we don't want to be entering when volatility is maxed out. We probably don't want to be entering when our momentum oscillators are overbought, things of that nature, things like bearish divergence, maybe big volume spikes on up candles are things to avoid, all of these natures. But all of those things are just qualifiers or confirmers. Okay. They're just qualifiers or confirmers. The main point is being on the right side of the market at the right time. So excluding this area, all right, which obviously sucked, but you have no idea at this point in time if you enter long here, if you're going to just get continuation, because it was true here, it was true here, it was true here, it was true here, and here, and here, and here, and here. So the idea is that when we have momentum, when price is above the moving averages, it is more likely to continue on in that direction. All right. Now, you can also obviously dial this in a little bit more by looking at things like, okay, well, what does the daily look like? What does the weekly look like? Are we on a daily trend? Are we in a weekly trend, et cetera, et cetera, et cetera? All of these things are going to give you better confirmation, better strength, but it never is going to replace the simplicity and beauty of is price above the moving averages. Which is why in Pathways to Profit, one of the most critical things that I tell you need in your strategy is a baseline. A baseline is one moving average that tells you whether you should be long or short. It bifurcates the market, tells you what's the trend, tells you what the trend is at a glance. And so if you want the easiest strategy in crypto that works, it's moving average crossover. That's it. Get yourself a 30, get yourself a 50, throw it on the chart, and it works. It actually works. Go back test it. Simple moving average cross strategy actually works on almost all meso timeframes for Bitcoin. Okay. The problem areas with those are going to be your periods of consolidation and chop, right? You can get chopped up in areas like this. You really can. Okay. And that can eat away a lot of your profits. That's where it comes upon you as the trader to identify objective metrics that for you determine what are the areas that I don't want my strategy firing in. All right. You want to drill down into the areas of the market that your strategy does well at. And once you've identified a pretty good concept that makes money, it's hard, as I talk about, it's really, really hard to get more winning trades. Okay. It's hard to get more winning trades because you're often forcing them. It is the best approach is to focus on cutting out your losing trades. All right. It's going to take time. It's going to take work, but that's where you should be focusing with getting better on your strategies, with getting better on your trading. All right. And again, simple concept, right side of the market in the right time. But the most important part of that is the right side of the market. The easiest way to determine whether price is going to go up is whether it's above the moving averages. Bitcoin is a momentum asset. Just about everything is a momentum asset. And we're not there. All right. So, and here's the thing. This is going to sound so ridiculously simple when I say it, but it really is an aha moment. Okay. It really is an aha moment if you haven't thought about this. When price is down here, when we don't have 4-hour momentum, okay? When we do not have 4-hour momentum, your concern should not be, is this a good price for me to catch the next, here, I'm going to zoom out a little bit so we can kind of illustrate this a little bit better. Your main concern should not be, is this a good price such that I can catch the next leg up in Bitcoin, okay? Now, I'm not saying you're wrong for not considering that. You're not stupid for considering that. Of course, like it makes logical sense. Like if I bought here and price goes here, well, this was a great price. It's better than buying here. It's better than buying here. Of course it is, right? But the thing is, we get so much PTSD, especially as Americans, because like we so much price action happens overnight, right? Like we take a trade or we buy or we sell or whatever, and then we go to sleep and we wake up and like price is here or here, and we're like, ah. So a little PTSD because of that. But the reality is you don't need to be concerned about this when price is down here, because again, here's the part where it's like, duh, obviously, but I really want you to internalize this. Okay. I want you to get the fear and the reactionary nature out of how you look at Bitcoin's price. And I want you to think more holistically, more strategically. Okay. There is no way price can go from here to here without first coming here. Okay. And it is not physically possible for price to get here, okay, for price to enter into this new leg breakout without first traveling back from the bottom back up into the range. Okay? What are the implications of this? Like, no duh, Justin, obviously it can't go from here to here. But no, it's deeper than this. I need you to think about this. I need you to really breathe this one in deep, okay? Your concern about, is this a good price relative to this target, is misplaced. A better way to think about it is, what is the probability or what is the trade setup for mean reversion? Because it looks like we're in a range and we're not trending currently. Okay, so we're in a range. So let's range trade. Okay, this is not a range. This is a trend. Okay, good. And so remember, relative to the range, okay, you're concerned with buying dips that maintain the momentum. This is a change in trend. This is when you think, oh, okay, hold on. Right? You start to get a little bit more cautious. You start to think a little bit more range tradey. Okay. Obviously, there was still a little bit of room left in the rally here. Okay. But not nearly the kind of rally that we had from here to here. Law of diminishing returns. So your main concern should be, okay, do I think this is a good mean reverting trade back to the mid-range or back to like the local resistance level or the local resistance level? Those are the trade setups you should be worried about. All right. Now, if you take that trade and you are able to successfully hit one of these targets, okay, do what I do. You book profits, about 50% profits, and you leave the other half open to run. Okay. If price starts climbing above, we regain our 4-hour momentum bands, things start looking good, you can start scaling back into a larger preemptive breakout position in anticipation of a higher target. But buying here and focusing up here is going to get you into trouble, because it is going to allow, you're not going to take profit here where you should be taking profit, and then allowing you to just close the trade if it looks like it's a failed rally. There is all the time in the world to enter into a potential breakout. This is not that time. I've drawn way too much on the chart, but I hope you guys understand. There's no danger of you missing this immaculate second coming of the pump when Bitcoin's price does not have the moving averages. It just doesn't. You might miss the movement off the bottom, sure, but you need to ask yourself, is your style of trading, is your strategy, is your risk tolerance such that you're even good at taking trades off the bottom? Because understand that you're taking a counter trend trade. Are you good at counter trend trading? Does your track record reflect that you have a track record? Does your track record reflect that you have success in counter trend trading? In fading breakdowns, which is a dangerous strategy for crypto. Fading breakdowns is a very dangerous strategy. Buying dips in a bull market while maintaining our moving averages is a great strategy, but once we start to deviate below those moving averages, it becomes very dangerous. So public service announcement, stop focusing on the $120,000, $130,000 price target when we're down here. Trade in the direction of the trend. You don't have to catch every move, and it doesn't make you a better, smarter, or dumber trader if you're looking at price action right now and you're like, looks like we don't have 4-hour momentum. I should probably be a little cautious. Okay? It's fine to be cautious. It's fine to be cautious. What's the worst case? You miss this trade from here to here? Okay. Whatever. Are you even good at those trades? Probably not. Most people aren't. I'm not. I fucking suck at those. I'm good at these trades. Okay? I'm a trend following trader. So I like breakouts. I like reclamations of momentum levels. I like BPRs, break, pullback, retest setups. Those are my bread and butter. So that's all I'm going to say. All right, so let's talk about this. Obviously, we do have the current meme meta is the 4-hour, not the 4-hour necessarily, but the day we see on the daily. We're going to go to the daily and look at it. The head and shoulders pattern. All right, that's what everybody's talking about. And even Peter Brandt's talking about it. Okay. Can we hide indicators for a minute? There we go. All right. All right. So we got the left shoulder, we got the head, we got the right shoulder. All right. AKA the Choden Balls pattern. All right. Now, the classic way you'll read about this in like Chart Patterns, which is a good book. I recommend it. You take a measured move of the breakdown level, which we're going to estimate to be right about here. And that's going to give us a price target of about 75,000. All right. This aligns very closely, of course, with the much talked about CME gap right here. We'll go look over just a second. PTP. Okay. By the way, 10-year yields potentially rejecting from the top. So there might be some goodness for the market. Could be a little copium. All right. All right. Here is the much vaunted CME gap. All right. So this has been the meme target of every chartist. Period. Okay. Now, that's coming in between 77 and 80,000. All right, that's the CME gap. Okay. If we allow a little bit of room for wicks and whatnot, because Bitcoin, the CME is not, right? Spot Bitcoin is not the CME. $74,000, $80,000, all right? But okay. So that's kind of like the target. About 77. I don't see a problem with that, all right? This could play out. Okay, I don't have a problem with this. Head and shoulders patterns are fine. Bitcoin has a good, Bitcoin does have a pretty decent tendency of like faking out on patterns. I really like triangles, have a good consistency. When we're in a bull market, triangles typically have a 60 to 70% accuracy per my back testings. A little bit lower once we enter into a bear market, but that's fine because bearish price action is much more brutal. It's like, the movements happen a lot faster. You build up to make a bullish movement, even though, you know, a lot of people just like, I don't know, just have PTSD and they don't see the build up in front of them. And I think the main thing is that just in crypto, if people aren't buying dips, which is really hard for people to do, like buying dips is hard. It's scary because price is going down. Like, what if it goes down more? It's freaking scary. But then you miss the dip. Okay, and then price goes up, and then you start to think, well, but now maybe it's going to dip again, and then it goes up more, and you're like, oh, well, but now it's gone up too much, and then it goes up more, and so it's just, I don't know, it's psychology. You just gotta figure it out, man. You gotta figure out it just really helps when you stop gambling and when you start reducing things mathematically to risk and reward. What is my position size? What is going to be my USD loss per trade? And you know, everybody loves the idea of that. Everybody comes in here, everybody watches the show, everybody watches the stream, everybody signs up to Pathways to Profit, everybody is super psyched about the course. Sounds great. Hey man, especially when we've taken a big L, right? It's usually when we get a lot of people in. You know, they're like, hey man, I don't want to take another big loss. I want to trade. I want to treat trading like a business. I want to make consistent money. But then when you realize that this is not the get rich quick scheme that you dreamed of, okay? So I have, for the last several years, doubled my account approximately every year. And that is amazing. I am blessed. God is good. Okay, I work my ass off to accomplish that. I trade my own private account. I trade a few other accounts, but that is really hard to do, and those are rare results. But I think it's pretty doable in crypto. But that means that you kind of have to get out of your head that you're going to 3x your account on one trade. You have to let that go by the wayside. Now you can do what I do. All right. You can do what I do. Look, I'm over here on GMGM. Okay. I just dropped $800 into this, you know, AI agent. All right. We'll see if that 3x is my position overnight. But that's, you know, it's my play money. Okay. This is my retirement account that I'm trading with. All right. This is how I view it. This is my, you know, if we lose this money, we're falling on hard times. All right. That's all I'm going to say. This is my life's work. So it's doable. I think 100% return almost every year in crypto, completely doable, but it just means you got to be serious about it. And it's really hard for people to let go of that gambling, get rich quick BS mentality that is just so infectious on crypto Twitter, on YouTube, on Twitch. It's all over the place, man. And yeah, so what do I say about that? Anyways, so let's talk about this. Bitcoin's price is not looking great right now. All right. However, there might be some decent things. We are putting in a doji candle, so we have given back some of the gains that we made. We made some progress today, so we are putting in a doji candle at support. This is the third test of this support in this most current range, and if we go back historically, this would be more appropriate, like 1, 2, 3, 4, 5, 6. So this is more like our sixth test of support. And the rule goes that the more times you test support or resistance, the weaker it gets, the more likely it is to break. So a couple scenarios here. All right, we'll go from ranges. I would say, I don't want to say like likelihood, let's just see what happens. But obviously we're at support. We're driving down towards support. This does not overall look good. You could say this looks good, right? If you want to be like, well, momentum is like slowing down and we're putting in this indecision doji candle, which is exactly what I said in today's alpha report. Okay, this is an indecision doji candle. This type of candle structure at support, we see it here. We see it here. Doji candles typically can lead to a Bitcoin bounce. All right. But it is hard to get excited. Nay, I'm not excited about going back to what we were talking about earlier about this. Okay. That $120,000, $130,000 price target. It's very, very hard to get excited about that when we're below this level. All right. About $100,000. $100,000 is now critical. All right. We poked our head briefly above it, popped back down, back tested resistance. All right. What was support, right? What was our breakout level? We back tested it. We fell back down. It's resistance again. Same as the resistance over here. Same as it was resistance over here. All right. Just unfortunately. All right. And so break of this resistance level could fulfill the head and shoulders pattern, moving us down to that $77,000. A couple scenarios there. One, we go deeper, which is pretty scary. Scenario two is it gets front ran. Okay. So we don't actually hit, 77,000. Maybe we don't even hit 80,000. Maybe we just go to like 85, 83,000. Because right now I think people are pretty lazy, right? We've had kind of this grinding price action. Nobody's like actually freaked out. I think, the initial, like people were freaked out here and here, right? Like for real, we had tons of people hopping in the chat, everybody like freaking out. All my DMs were blowing up. Like, oh my God, what happens? But those have slowed down considerably. All right, which is a sign of complacency. So what happens when the market's complacent? Bloop, bloop, right? I'm not saying we rock it back up, but I'm just saying, let's just forget the second leg of it for a little bit. Forget that. Let's just scribble that out. But we get a breakdown, and now people are going to really panic. All right, they sell, maybe thinking they can buy back down lower, and then again, kind of the alley-oop, right? Which Bitcoin is kind of infamous for. Again, I'm not going to be the guy that's like, okay, well, we're going to go down. And then obviously it's just all the way to the upside. I am still very bullish. I don't think we're anywhere near the top of the cycle. We'll look at some charts here to kind of confirm that, or at least give you my best case for that. But we're not at a cycle top. All right. We do seem to be potentially at a local top. Okay. And I think a lot of that is going to be driven by our fundamental factors. So for that big purpose, let's now move from discussing the head and shoulders meme and kind of where we're at with current price action. Although let's just discuss that real briefly. Current price action and potential setups that I see. Okay, so as we see, price bounced to the 4-hour guppy bands, and we were not able to reclaim them. All right, we briefly poked our head above the hourly, hit that hourly point of control, rejected. 30-minute as well, hitting that 200 period SMA, rejected. We've basically given back all of the gains. Still a potential here to make a higher low, but that was quite a bit of selling. Getting bought up right now, but we shall see. Price is below VWAP, so if you did want to enter for a potential movement up to 97 to 100K, which I said is potentially likely, basically a retest of this 4-hour 200 SMA, that would kind of be the setup. But for right now, I'm pretty speculative about that. I'm not going to lie. Probably the strongest piece of evidence I have, because now we're going to spend some time on the weekly, is that we have basically retested, although you can see we haven't actually quite touched it yet, is that 10 weekly that weekly 10 period exponential moving average, which is again kind of the 10 EMA is always my go-to for are we in a strong uptrend. And so we just kind of have a good example. The previous time Bitcoin hit a local top, we pulled back to the 10 weekly moving average and we bounced pretty strong for a lower high and then a lower low and then a lower high and then a lower low, and then started making this higher high, higher low structure, catalyst of the first rate cut, and of course the election of Donald Trump. So, and essentially that's what I'm looking for, guys. So I've done a lot of analysis on this. I've laid this theory out quite a bit. This is basically all of the Fed catalysts that have led to Bitcoin's bullish periods. All right. All of them strongly driven by a dovish Fed, and more specifically, dovish monetary policy. All right. So specifically, as we can see here, the Fed pulled back on raising interest rates. All right. That occurred back in January. This occurred after the Bitcoin ETF launch. And notice that, price really didn't do anything for almost a month after the launch of the ETFs. Then the Fed pulled back on raising their interest rates. That was the catalyst to allow price to pump. All right, we pumped until March, where the Fed came back out in the March FOMC. And although they were a lot more hawkish, they're like, well, we're not exactly sure when we're going to start rate cuts, right? A lot of things are dependent upon this, all this, blah, blah, blah. And what happens? The market was like, stopped pumping. And we entered into the summer doldrums. All right. Then in September, okay, we finally got our first rate cut. And literally the next week we started pumping. Obviously, then Trump got elected and we started pumping harder, but we were already beginning to pump. All right, following that, already pumping following that. Then what happened at the FOMC several weeks ago? We got our second rate cut, but more importantly, we got a very hawkish stance from the Fed saying that, whoa, actually, you know, inflation kind of kicking back up, and we might actually have to pause rate cuts in 2025. And now the market is even pricing in, the analysts are actually pricing in rate hikes in 2025. Now, as I laid out in today's Alpha report, I don't think that's actually going to happen. I do think that inflation is under control. My inflation model suggests that. But the Fed can't be seen as flip-flopping on the issue, because I think the Fed, and particularly Jerome Powell, are trying to express their independence from a headstrong administration that's coming in. So if they really wiggle back on rate cuts in January, I think that's far too soon. So I think that people who are looking for an immediate continuation of the bull market, it is going to happen. 2025 is going to be great, but it does seem right now that we are most likely, my baseline case now is that we are going to experience something like we experienced from March to October, where we basically get lower low, lower high, long spread consolidation, which means good news that we actually should be in for a bounce within the next 2 to 3 weeks. All right, to the upside, maybe hitting that 100. Again, we do have to start getting excited above 100, but just looking at, you know, again, my model right now, looking between 100, 103,000 potentially on that next bounce. Maybe lower, it'll just depend on kind of how low we go. So I'm not really buying the head and shoulders play out. I'm really more concerned with how things look on the weekly, kind of the bigger picture. So that's my base case right now, is that we do enter into this lower low, lower high consolidation. Overall should be good. That gives time for the weekly momentum bands to catch up, which is where we found support last time. So that should probably occur between the $80,000 and $90,000 range over time, with the lowest low maybe being something like, well, hopefully really not a lot lower than 80,000, but we'll see when price gets there. So as we can see from the local top to the local bottom was a 33% correction. So if we experience something like that, a 33% correction is going to be taking us down to about 71,000. All right. So a little bit scarier than that 80,000. But again, overall, that's not what I'm afraid about. I'm not afraid about Bitcoin entering into bearish territory in the long term, about not realizing a bullish 2025 unless price is below $70,000 on a closing basis. That's kind of my, oh my God, I'm concerned. Up until then, I'm in reaccumulation mode. So with that being said, for those who are a little skeptical and worried, I mean, the safest place if you're scared and worried is probably be on the sidelines. All right. But I'm holding Bitcoin. I'm holding Bitcoin throughout this. I'm holding Bitcoin down to 70,000. It's completely fine. I've been in Bitcoin since I called the bottom of the market. After the collapse of FTX, we identified the weekly bullish divergence. I've just been adding to Bitcoin ever since then. So again, people have been following the channel for a while, should be sitting in a pretty good spot. That's where we're at. All right, so that's where we're going. And also, what are the catalysts that are going to be the continuation of the bull market that are going to kind of align with the technicals that I laid out? Well, it's going to come, all right. Again, I think, so we're going to have an FOMC January 29th. March and May are the next FOMC meetings. And I think January and maybe even March might be a little too early for the dove to pivot dovish. All right. March, we might start to see inklings of it, but then if they came out in May with a rate cut in a very dovish position on future rate cuts, we're going to fly. So just revising a little bit. And so this, we're going to talk about alt season here in a little bit, but this also creeps into this idea of alt season. All right. So to discuss alt season, let's go look at our macro indicators. All right. First off, let's start off with our Bitcoin cycle indicator. As we can see, we briefly poked our heads above the 50% mark of the logarithmic cycle here. All right. Notice that both in 2013 and 2017, we had right-handed cycles extending all the way to the top of the logarithmic growth curve. In 2020 and 2021, we had a left-handed cycle where we had an early termination of the bull market. And so my speculation is that we will have another right-handed cycle, most likely progressing more towards the top of the logarithmic growth curve above $300,000, but it's still conservative targets of $250,000 for this bull market. As far as our other cycle indicator, MVRV ratio, we're nowhere near the cycle high. every single previous bull market, even with the law of diminishing returns, would take profit on market value to realized value around 3.3 multiple. AVIV is a little bit more accurate, but this is going to do just fine. We're nowhere near there, just encountering the resistance that we experienced again back in March of this year. Stablecoin dominance. Stablecoin dominance is struggling to break above the 6% resistance, but again, we found strong support here, just like we found strong support here at the top of the market back in March. We have made a breakout, high or low. This is a break, pullback, retest. It does look like stablecoin dominance does want to continue pushing. I'm not really seeing too much bearishness from stablecoin dominance. Now, keep in mind, of course, we are below the 200 SMA, so we are in a bit of a bearish trend, but now price is breaking back above our major moving averages, and those moving averages are beginning to move up, and we are on the cusp of a moving average crossover, which is, again, whatever asset you're trading, it's basically one of the simplest trading strategies if you think something's going to keep going up. So this definitely does look like a reversal in stablecoin dominance, which does not bode well for asset prices in the crypto space in the short term. Stablecoin and Bitcoin dominance, however, again, there is a slimmer of hope here for alt season. All right. I think it's unlikely. I do think it is more than not unlikely that we are going to have that as the majority of the market seems to just think is a fact, right? That we're going to be having this altcoin rally, this alt season, starting like now, Q1 of 2025. It's possible, but I think it's a little unlikely. This is stablecoin dominance. Now this is a promising chart for the alt seasoners out there. All right, as expected, as I said, we had this big deck cap bounce. All right, retesting the breakdown zone of stablecoin and Bitcoin dominance, and we have pulled back down. We're below the 200 MA. All right, prices are starting to go back down below the moving averages. Our moving averages are leveling out, but that's okay. It's going to happen on a pullback because of the big move that we had. So I would like to see stablecoin dominance continue trending down, and that bodes well for altcoins, because we have seen altcoins outperform over the last week and a half. All right, it's been better to hold altcoins than Bitcoin for the last week and a half. It's just true. It's a fucking fact. All right. This is the others relative to the price of Bitcoin chart. So this gives us the best depiction of how altcoin prices, excluding Ethereum, XRP, and BNB, are holding up against the price of Bitcoin. And as we can see, I called this reversal off the 200 SMA. We had 2 time transformation buy signals. We've had a nice bounce. All right. But this is still a little troubling. Still a little troubling. You know what I mean? This is overall just like not super fantastic. You know what I mean? So this is very much mirroring the stablecoin dominance chart that we saw. But unlike stablecoin dominance, where we did reach a strong level of historical support, ba-boom, ba-boom, others, on the other hand, is in a very long-term downtrend. So we are really asking for quite a bit for a breakout here. Guys, really, like altcoins are up like 1,000x or 1,000%. I mean, we really are pushing it. We really are asking the crypto gods for a lot. For a lot. You know what I mean? So, all right, quick break. I do want to review chat. Shout outs. I see M3TZ. He says, any idea on DCA versus lump sum in a bull market? Yeah, so I've seen some content about what you're talking about. And I've seen some X posts on this very same thing, basically saying that it's just better to lump sum into a bull market. If I were to give you my personal take, here's the thing about models and statistics is that they bear very little, real meaning on reality, on how it actually feels on the ground, right? Federal Reserve Bank. Oh, what do you mean? Like unemployment is at a historic low, you know? Everyone on the left, what are you guys complaining about? It's so great in America right now. Everyone has a job. Right? Everyone has a job. Everybody has a good job. They're making so much money. My goodness. And then I literally go to any town and I look around and I see all the homeless people. And I hear, very active in my community. I have lots of friends, very active in my church. And I see and I hear people. I hear them struggling. I hear them. It's statistics, right? Statistics. So the idea of whether or not lump sum investing versus DCAing, for the most part, I'm going to say 99% of the time, I'll say 90 to 95% of the time, I'm going to say DCA every single time, right? For a couple of reasons. One, control. When you just blow everything, when you just shoot it into the market, you've lost your element of control. And so everything that happens after that, if you make the decision, oh, like maybe I should have actually, oh, wait, let me cash back out, right? Ooh, let me sit in cash because that dip a little scared me a little bit. Now you're down. Okay, this is a good time to go back in. Oh, no, it dipped again. It just gets you, I think, into a bad habit of being very reactionary, okay? Most of the time. DCAing allows you to scale in on the way up, scale out on the way down, or the better way to do it is scale in on the, scale in early on the way up, scale out later on the way up, right? Is the preferred method of doing it, but sometimes that's not always the case. But it just gives you more control. It gives you dry ammunition, and I think that really makes a big impact on the psychology of it, on your feeling of control. All right. Which is huge. All right. Psychology is the biggest demon in this game. It's the biggest barrier to success. It's just the psychology. It's just being able to deal with the swings, being able to deal with the up and downs, being able to conquer your emotions, because everybody does the same thing. They kind of have this idea and then they see a green candle and then they put a lot of money into the market with no conviction. And then as soon as they're down a little bit, they're out because they can't stomach any drawdown. And that's, you just can't, if you can't stomach drawdown, you're not going to make it in trading. It's almost never that you enter into a trade and it just goes straight up. It's happened a couple times for me, but almost never. In every single trade, I have to stomach some drawdown. Price does not immediately want to make me wealthy. All right. The market doesn't fucking care about me. The market really wants to see if it can make me puke so that savvier investors can then take the market up. All right. And sometimes I'm just wrong. Sometimes I'm just wrong about the way I want the market to go. Now, the only exception to this, lump sum versus DCA investing, the only exception to this is if you are being very financially savvy during a bear market, right? And you are stacking cash, right? You're just stacking cash, okay? You're setting it aside with the express purpose of putting it into crypto or putting it into the stock market to ride the next cycle, right? Most people don't have the strength or skill to do that. Stack that cash, and then you get your kind of clear, objective signal that the market is entering into a bull market, whatever that might be. Moving average crossover strategy works really well. Baseline, get yourself a baseline, you know what I'm saying? Available to all premium members. I'm just saying. And then you go all in. All right. It's higher risk, higher reward. But the upside there is that you've been patiently waiting and stacking this cash. It's lump summed. It's ready to go. And you get the kind of broad market signal and you go all in. You might be wrong. Okay. Which in case you need to have an early exit type of signal. But again, like I said, it's almost never that the market just moves immediately in your favor. So it's just, it's what kind of risk do you want to take? Do you want to die by the sword right out of the gate? Or do you want to be right and really make a huge impact on your account size, right? Versus kind of my preferred method, which is just kind of, dip and bobbing it, you know what I mean, throughout the cycle on the way up, right? Because that is what I do, right? I'm not a lump sum investor. I'm a Bitcoin hodler, but okay, good question. Thank you, M3TZ. Appreciate you, man. Alex81SG, shout outs to you. Alex says, hope all you US people are catching up with the new tax stuff. It is an absolute nightmare. It is not, it's not great. Especially for DeFi brokers. Luckily, that doesn't take effect until 2027, I do believe. And then I am lucky to live in the great state of Iowa where we have a flat tax that is below 4%. Life's good. Wish I was in Texas, though. Mr. T says, I don't think we are seeing this head and shoulders play out. Doubt we going into the 70s, to be honest. I certainly, I hope not either. If my thesis is correct, that we do enter into the winter doldrums now, having seen the summer doldrums, then it is very likely that we might see price in the mid to low 70s. But again, I don't think we're going to see that within the next month or so, or the next few weeks. I think that's going to happen if we get a lower low, lower high, lower low, lower high, and then it's like, okay, well, the last lower low was 82, and like, okay, well, like we made a lower high, and you know what I mean, like probably going to 78. So that's, I don't think you need to worry about that like very quickly. Profit Bear says he made some money on a stock, Vulcan and NXU, regular stock ETF, electric companies. You beast. I am familiar with Vulcan, VLCN. Freight Trade says this should be my best episode yet. Hell yeah, man. B-Flow, it's the get broke quicker nightmare. Yeah, it's so true, man. NXU ran like 500%. You beast, dude. I'm loving it. Jordan Stotts, my Christmas was amazing. I hope your guys' Christmases were as well. Profit Bear says I would never ask God for a little. Yeah. We'll be asking for a whole lot. You are welcome in 3DZ. Alex says, I'm referring to the per wallet cost basis criteria. Tomorrow is a key deadline to take action. All right, hold on. If you want to send me, Alex, or if you want to paste in here, anything that you want us to know that would be helpful to the audience, I would be happy to talk about it to the best of my ability. But give me an idea here. Okay, yes. So, the Internal Revenue Service has introduced significant changes to cryptocurrency tax reporting effective January 1st, 2025 under Revenue Procedure 2024-28. These changes mandate a shift from the previously common universal cost basis tracking method to a per wallet or per account approach. Per wallet cost basis tracking. Taxpayers must now track the cost basis of digital assets separately for each wallet or account, rather than aggregating holdings across multiple wallets. This means that gains and losses must be calculated based on the specific wallet from which assets are sold or disposed. To facilitate this transition, the IRS offers a safe harbor allowing taxpayers to allocate their unused basis, i.e. the original purchase price of unsold assets, to specific wallets or accounts as of January 1st, 2025. This allocation must be reasonable and is crucial for accurate tax reporting. Action steps for compliance: consolidate wallets. Consider merging smaller balances and organizing accounts with clear purposes to simplify reporting. Allocate cost basis. Assign the original purchase price and acquisition date for each asset by wallet before January. This involves documenting the cost basis of assets in each wallet or account to ensure compliance with the new rule. Maintain detailed records. Of course, they always say that. Consult with professionals. So yeah, basically, I get the idea here. Generally, this isn't going to... This isn't going to affect me too much. This is only going to affect my long-term holds. Lucky that the strategy that I use for my long-term holds is I create, every time I make an allocation, I literally create a separate instance of cold storage for that holding and move it in there. So, and I do keep good records, so that's not much of an issue. I will say though that I've heard a lot about this. Although I'm not gonna lie, I wasn't aware that it was in direct response to this, but I do see it now because I was seeing people post things like, you know, imagine letting the US government like scare you into consolidating all of your holdings. And so everybody's, you know, I've seen a lot of posts about like, oh, this is a big psyop and just kind of an attempt by the government to basically make the system less decentralized. This coming off of course, the fears of BlackRock's promotional video where they're like, well, there might not be 21 million Bitcoin forever, you know, like, and so I get it. I definitely understand that. So yeah, you know, the good times are just slowly, the good times are just slowly leaving us behind, you know, slowly leaving us behind. I'm pretty blessed. I just have everything in a spreadsheet. I send it to my accountant every year. Well, Rudy, let me be very clear about something, okay? Very rarely do you have to do anything, all right? So no, there's no requirement that you consolidate your wallets. However, the IRS is going to require that moving forward that you track whenever you sell crypto, you have to whenever you're accounting for capital gains, whether short-term or long-term, the only thing that matters is your cost basis. All right. And so if you're using multiple wallets, multiple exchanges, multiple accounts to purchase cryptocurrency, it used to be, prior to this new rule that goes into effect in 2 days, it used to be that, okay, so let's say I've got a Coinbase account, and let's say I've got a Kraken account, and then I'm also doing some stuff on chain in my Rabby wallet or my MetaMask wallet. Okay, cool. And I'm buying Ethereum kind of all three places, right? Doing Ethereum, right? I could just aggregate that and be like, okay, well, what is my universal cost basis for my Ethereum, right? Spread out across all my wallets. Cool, no problem. All right. That also gives you quite a bit more leeway and like, okay, well, where do I distribute? It makes it more user friendly. Like I can sell over here and just account for it over here. Like that's all fine. But under the new rules, no, if you sell Ethereum out of your Coinbase wallet, well, your cost basis has to be, well, what price did you buy it for on Coinbase? FIFO has already been, as far as I'm aware, the rule, first in, first out. I have heard of tax strategies where they do get away with LIFO, and obviously a lot of people get away with a lot of stuff with regards to crypto taxation in the IRS. Not condoning, but just pointing that out. But again, IRS is a pain in the ass, and I'm a taxation equals theft guy. But I've always advocated just keeping records. Highly recommend Coinly, cointracking.info. I use Coinly. Well, I pay for Coinly for my accountant, and he tells me that it helps. I digress. Okay. Okay, so let's look at some altcoins here. Daily time frame. Looking at Athena, we are triple bottoming and moving up over the last little bit. Let's get this bad boy expanded up here. So far we are holding, so we kind of see this kind of same somewhat head and shoulders pattern playing out on Athena here, or yeah. We do have the daily momentum bands, but again, struggling to reclaim the 4-hour momentum bands here. This is potentially promising, but I want to see this uptrend hold. Don't really want to see prices below there. What about the people that never sold, only borrowed in DeFi, as well as paid taxes on it back in 2014? Not a CPA, but DeFi transactions are all taxable events. So all interest earned from DeFi protocols is a taxable event. Of course, losses are taxable, or you can account for capital gains losses on your tax return and carry those forward, I think 5 years. But so it's a really good strategy if you lose a shitload of money, like tell the IRS that. I think it's what is it, 3,500? It's like 3,500 to $5,000 you can deduct from your taxable income per calendar year, based on capital gains losses, and I think you can carry those forward 3 to 5 years. So no, there's simply the reason, sorry, and just to be a little bit more clear there, the idea of the wallet consolidation is that the IRS is allowing this safe harbor period for 2 days. Thank you, Prophet Bear. They are allowing 2 days from now, so until January 1st, to basically consolidate all your wallets and, basically reset your cost basis to what it would be right now. So basically that would be convenient for a lot of people to stay compliant, just make it easier, you know, from an accounting perspective to stay on top of your crypto taxes. However, again, from the crypto perspective, it also does decrease your security because now all your assets are consolidated in one location, or a smaller amount of locations instead of spread out across multiple wallets. So it's, you know, it's just what, you know, there's no requirement to consolidate your wallets. It's just, you know, may or may not be easier for you. Let's see. Pepe below daily momentum band, Sui, XRP, all basically holding on to support here, as well as Mantra Ohm, as well as Deep, as well as Ondo. Again, everything trending down. We don't have any strong, fresh new daily momentum yet. Everything is just in dip buying territory right now. Again, altcoins are holding up a little bit better than Bitcoin actually right now. So I would like to see that continue, but I'm not super getting my hopes up at the moment. Phantom really taking a dive. Hyperliquid entering into a symmetrical triangle. Hedera hash graph. Jito, strong bounce off the 200 SMA. Jito is one of my favorite plays for Solana, along with Radium. Aave holding up pretty well. Dinosaur coins. Avalanche consolidating at the 200 weekly SMA. Same with Polkadot. Ethereum consolidating at the weekly 10. Cosmos not looking very good. Blockstack coming back down to the 200 weekly SMA. AMP, I've sold all my AMP now, so I'm out of all that. Not too worried about that. Spore, let's see here. Brett not looking great, down at the daily 200 SMA. Parcel triple bottom. Virtual still pumping, of course. We're going to talk about AI agents. Spore AI agent. I called this one for the group on Thursday, and it went up about, I said 70% in the report. I guess it's actually more like 90%. It's basically, it's still above where I called it, but did pull back down a little bit. Interestingly enough, tracking this one on the hourly, and I'm hoping that we get another push, but I'm not sure. This looks a little scary, but I also do like these big buys, so we'll see. Good to see you, Peckham. Welcome on in. I don't really think there's any big need for this. I think we can just mostly go to, what else do we want to talk about? All right, so we talked about the Head and Shoulders. We talked about the FOMC. We talked about alt season, question mark. We talked about AI agents. Oh, we didn't talk about AI agents. We're talking about Spore. BTC potential push. All right, I think that's all good. I think that's all good. Good. I do need to give you guys an update. I don't have the data in front of me, but I will be doing an update. We did, of course, close out the Christmas season trading competition. So those prizes are being distributed right now, and I will try to talk about that, if not in tomorrow's show, on Wednesday's show. All right. And tomorrow, the rest of the week, this was kind of a weird day for me because I did have an appointment this morning during when I wanted to start the stream. But the rest of the week and moving forward, we should be good. Peckham says, all I want to know is what happened on Jesus Coin on the 25th. Well, they say he died, and then 3 days later rose from the dead, right? So let's hope for a post-Christmas miracle. No, but here's the thing, right? Listen, Christmas is just when we celebrate the birth of Christ, okay? You know? He didn't die, and he doesn't resurrect until April. Okay, so it's all good. Stack your Jesus sats. It's gonna be all right. Jesus saves. So let's talk about virtuals. Obviously, virtuals and AI agents are the hottest thing. So while I am certainly not an expert on this, I have certainly been doing a little bit more degenning than I probably should lately with some decent results. I did grab about 40% on that Spore trade myself. I did actually just put another $1,000 back into Spore to see if we do get a secondary run. Not going to hold on to it too much if it comes back down. That's not really the game that I'm in. I'm a trend following trader and a momentum trader. So I did just see it triggered on me the hourly crossover, so I am playing that. I entered that position slightly before we started the stream. The other thing that I am trading as well on Solana is going to be this yes, no error. Other things I'm watching are going to be Zerbro, Nothing, A16Z, obviously Fartcoin, and Doubting Thomas coin is next. And this one's kind of interesting. This Anita May win. All right. This thing is kind of doing some A/B trading. All right. So overall, not a bad looking chart on Solana. Again, I wouldn't be approaching this Anita May win with like the expectation of pumps, like, oh, we're going to like make this massive run, but it's doing like, 50% movements pretty reliably off the bottom. So like not bad. So yeah, re-entered Zerbro over here. Overall, not too bad. I did go in pretty hard on Pilzumi. Not too bad here. Not too hard, I guess. Not like ridiculously hard, but like for me playing around on the little poo coins, I think Pilzumi could actually do pretty good. What I like about this one is that obviously it's at a full retracement, right? Reached $20 million market capitalization. It's at 3.5 right now, and the developer just bought back in, all right, which was pretty cool. So I like that. And I like Pilzumi, right? I was playing around with the agent. It's pretty fun. It's got like the little split personality things. This one's pretty good too. This Nothing, they've got a very fun AI agent that I played around with on X. A16Z though, if we want to like talk about the big ones, okay? A16Z is probably going to do just as well, if not better, than virtuals. And virtuals sitting at what, 3.5 billion dollar market capitalization. A16Z already at 1.9. But here's the thing, virtuals is definitely leading the standard for AI agent systems. Because listen, if you guys haven't checked out the virtuals protocol, it's really cool. Okay. It's got this coin market cap-esque, you know what I mean? Like front end, right? You can create a new AI agent right here. All right. Obviously the ones that everybody are talking about are going to be Game, Luna, AI XBT is pretty popular. Vader AI is pretty cool. They're DAOs. All right. And I don't know why is their website not on here. You just go to vader.ai. Yeah, vader.ai. Okay. Both of their small cap and micro cap DAOs are closed, but they do have a mid cap DAO coming soon. And then they're going to be launching a human run small and micro cap DAO. So I'm actually pretty interested in getting into this once it launches. Probably the place that you guys should be aware of, if you're not, is obviously cookie.fun. This is the coin market cap of tracking the AI agents, where you can track their mind share, which is basically the most important metric for seeing like which one's doing well. So here we can see what is the delta over the last 7 days. AI XBT has been getting far more mind share on X. You can even track that along with their price right here. And obviously the green bars in the background are going to be their mind share. So Pretty good, man. This is really this is definitely the meta right now. This is definitely what's performing well while everything is not. People calling these the next, you know, kind of the NFTs, or, you know, the next meme of this cycle. They're not, unlike memes though, these things actually do cool things. You can, on virtuals, you can interact with these you can interact with these things. You can talk to them. You can connect your wallet. You can do all of these things. You can even make your own AI agents, which is it's pretty cool. I'm not gonna lie, it's pretty cool. I've had some fun. So definitely not an expert, but I would just say kind of the no-brainer things. And I put this out, right? I put this out on, I believe this was Friday's report, where I talked about, I did all of the market cap comparisons between what we experienced back in 2020, 2021, okay, with the hype projects. I mean, with the meme hype projects hitting like 60 to 70 billion dollar market capitalization, Doge outperforming at like 80, 89 market capitalization, peak in 2022, I believe. I think it was March. And right now, if we go to CoinGecko, for example, okay, it is only the top 11 coins that have a market cap over $20 billion. Okay. Then we drop off to 15. So just in the last cycle alone, we were seeing things that were absolute dog water hitting 10 to $20 billion market capitalization. And again, we only have one, you know, down to the top 21 over a $10 billion market capitalization. Okay. So I think there's quite a lot of room in the next leg of the alt cycle, whether that comes contrary to Bitcoin's price as it did in 2017, because we had alt season after Bitcoin had already peaked. We peaked in December 2017, but alt season ran through like April of 2018. Excuse me. So that's completely possible. I don't think that's quite likely. I think that was quite of an anomaly. We've only seen that once. Of course, we only have several market cycles to compare anyways in the first place. But I mean, more likely, you know, altcoins continue. Right now, they're outperforming BTC. So I would like to see that continue. Okay. But I'm not holding my breath that we're going to see new all-time highs right away. I think that's probably more likely when global liquidity shines light back on Bitcoin again. But I wouldn't just get completely complacent. There's still lots of opportunities out there. There's still lots of trades. And those opportunities right now are going to be the AI agents. But I will just a word of warning, right? Before you dive in, before you start trading, before you know all this, go do your research. Get familiar, okay? Get familiar with this website, cookie.fun. Spend 2, 3, 4, 5 hours on here reading, looking, analyzing, writing things down, taking notes. Spend some time on this website. Spend some time using these AI agents, understanding what it is that you're actually doing and what these things actually are. Compile an X list. All right. I have one. I'll make it public to you guys. I'm not sure if it is public. Where I do have lists. Here we go. I'm not sure if it's public though. Here are lists, AI agents. Edit list. Okay. It's not private. You go, if you're following me over on X, I have an AI agents list with some of the top posters for AI agents. No individual projects, just people who post good alpha and ideas in the AI agents. So I would just go through, subscribe to this list, and just go start reading. Or read for like 3, 4, 5 hours. All right. Good to see you, Tyler. Hopefully you catch up when you get to this point. Just know that I love you, brother. Peckham asks, I was actually looking at this for the first time today. Just suppose, for example, can I make an AI agent to be an estate agent or some tool? Yes, you absolutely can. You can literally make your AI agent to be anything you want it to be. All right. I just posted some alpha today for the Crypto Trading Academy about a new project that is a DeSci agent. And what its job is it reviews scientific papers for mathematical errors. So yeah. I have got, guys, I'm not going to lie. Look at all these comments that I have to respond to. And this is all because I just posted. What did I post here? A ton of posts, but I responded to this dividend dude, and he was making this idea that Bitcoin, he was just saying Bitcoin is a pyramid scheme. And I'm like, because it requires new buyers for price to go up. And like, this is like, it's so stupid. And so I say here, if you want to be really pedantic, for any price to go up, there needs to be new buyers. If you want to call Bitcoin a Ponzi scheme, you need to apply that same logic to every stock that exists in traditional finance. The only way the number goes up is if somebody buys at a higher price. And it's so reductionistly simple. Like, what this is true. It's the truth. It doesn't matter what the underlying value is, because that's not how the world works. Value is subjective. It doesn't matter. It doesn't matter at all what Apple comes out with. They could come out with the coolest, shiniest, brightest, best brand new iPhone that brushes your teeth, wipes your ass, buffs your car, and manages your dating profile. Cool. If nobody cares, if nobody buys Apple's shares because of that, Apple's share price doesn't budge an inch. So it is completely not even relevant to this dude's comment what Bitcoin's underlying value is, because it doesn't change the fact that for the market price to go up, you need someone to buy at a higher price. It's just the way the economy market works. The auction market works. It's the only way the order book works. The only way price goes up is if someone is willing to buy at a higher price. The only way price goes down is if someone is willing to sell at a lower price. That's it. It's the only way it works. And so we can have this conversation about, does Bitcoin have a good underlying value? But I'm just telling you, man, all these freaking tards are just gonna, and I'm sure this dude is intelligent. He's smart, right? But it just blows my mind that in 2024, having lived through inflation, having seen all the historic examples of hyperinflation, having seen everything, everything Keynesian economics completely laid bare, completely debunked, completely argued against. And now we're seeing modern monetary theory. Modern monetary theory is not something new. It's not any new ideas. It's still fucking stupid. It's Keynesian economics, all stuff that's been debunked and disproven throughout time, throughout history, over the last 100 years, wrapped up in a shiny new package, polished and handed to us, because at the end of the day, politicians and journalists are idiots, and they will buy anything that looks like a shiny new package. And politicians will buy it because they want to sell their voters on shiny new things so that they can get votes. There's nothing new about modern monetary theory. It's the same garbage wrapped up in a bright, shiny new box and presented to us as if that is good. You know? The government and the individual household, completely different rules. You know how, like, when you have your own household, you know what I mean, and you go into debt and you're, like, your life sucks because of that, because, like, you lose confidence in your own personal life and your personal health goes downhill, and you have less freedom of choice because now you're making choices based on your debts and you're not living with this abundance mentality, and you just constantly all under the crushing weight of this debt and deficit, and looking at your children, or maybe not even having children, and all of the negative implications of their life. You know how, like, that's a bad thing. But when governments do it, it's completely fine. It's cool, bro. Governments can just run that ink right into the red. It's all good. Doesn't matter. Debt's not a real thing. Get the fuck out of here, man. My God, if I had $1 for every person on X who does not understand economics, goodbye, really plain, I would have more Bitcoin. So, like, listen, the reality is the stock market is no different, Okay, all of these people who are like, oh, traditional finance stock market over here, but Bitcoin down here because it requires people to keep buying for price to go up. Stocks are the same. Stocks are the same. If people stopped buying stocks, prices would go down. The stock market is a pyramid scheme. It is the pyramid scheme of our age. But that's okay, because that's how humans work. It is a collective communal lottery where everybody's like, hey man, I'm gonna buy into this thing that keeps going up in value so that hopefully when I need to pull my money out, it will be worth more. Okay? Bitcoin's the same thing. Everybody is buying Bitcoin with the hope in general that it will go up so that when they need to get their money out, people who are buying it for the store value or for speculative reasons, that it will be a higher price when they get it out. It's the same thing. We're just seeing this cultural shift of people not trusting traditional finance and wanting to at least do that on something that is denominated in something that can't be printed or inflated away. Okay? Because anytime you're talking about the stock price going up, you then have to compare that. Okay, well, but like what, in what currency, and like what's the purchasing power of the USD, and has that gone down? Is that a reflection of the economy? And this and that, blah. I'm glad someone does, Profit Bear. I'm getting too old for this shit. Okay, chart request. What do we got? Chart request, and then we're probably gonna wrap it up because it's late, guys. You know, it's late. I'm sorry, it is late. Okay. Thanks, Peckham. I appreciate you, man. It's all a pyramid scheme, man, and that's okay. There's nothing wrong with a pyramid scheme if it's big enough. Okay, it's like like too big to rig, right? Like it's all like any investment scheme is basically a pyramid scheme. Period. The whole point, the only thing that separates a bad pyramid scheme and a good pyramid scheme is how big it gets. Okay, if the pyramid scheme gets so big and goes on for so long, everybody just accepts kind of the underlying, and puts under the rug the underlying, like, let's say, immorality or danger of it. And they're like, oh no, this is normal, this is fine. But like to not look at the stock market and not understand that is also a pyramid scheme. People don't fucking buy stocks. People don't buy stocks because they like the company. I don't buy Apple because I care about the iPhone, right? I'm an Android guy. But I don't buy Google because I'm an Android guy. The only incentive that anybody has to buy Google stock is number go up. That's it. It's it. It's the only reason people buy bonds. It's the only reason people loan money. Number go up. I'm going to get my money back plus interest. Jesus fucking Christ, man. Bitcoin's a pyramid scheme. Of course it's a fucking pyramid scheme. And it's getting so big to the point where you don't like that. It's all a pyramid scheme, but that's not a bad thing. Okay? It's also decentralized money, right? It can't be devalued by governments. It can't be seized. Can't be confiscated. Unconfiscatable. Don't let the IRS scare you. What are we looking at? NXU. Are we bottomed out? Holy shnikes, God Almighty! I fucking hope so. All right, hold up. All right. This surge appears to be linked to the company's recent private placement financing. On December 26th, holy goddamn. On December 26th, NXU entered into a security purchases agreement with investors, agreeing to sell 6.8 million shares of its Class A common stock, along with pre-funded warrants and Series A and B warrants totaling approximately $3 million. So this really contributed to their liquidity, and has obviously clearly positively influenced investor sentiment. So what we gapped up, Jesus, because we closed down here. We gapped up 275%. Okay. Nice. In the post market, we're trading above open at 174 right now. Went up 66.93% on a closing basis. Overall went up 136.83% on top of the 200+% that we gapped up. I mean, my goodness gracious, man. So listen. Just cautioning you, that the last time this happened, right? We gapped up, okay? Didn't go anywhere. It fell back down in the accumulation range. But I mean, if this thing runs, this is from any accounts, this is looking like accumulation, and that is a big catalyst. Let me look at their economic calendar. So there's no catalysts on their calendar. So the next thing would potentially be their earnings on February 26th. As far as the daily goes, we were bottomed out on the reversal indicator and recovering from that, which is always a good sign. Now a big pop to the upside, which is quite good. Weekly time frame. I mean, we did get that weekly buy signal actually on yesterday's weekly close. Look at that. You love to see it. Unnatural volume, of course. I mean, we're not technically overbought. You know what I mean? It doesn't look too bad. There seems to be adequate demand in the post market. This thing's probably going to gap up again. So good find. Again, I like I said, they don't have any particular catalyst. This all seems to be, as far as I'm aware, just due to their, refinancing. So traders are hopping in on that. Get well, the getting's good, man. Yeah, I mean, the weekly definitely looks, that is bottomed out as a bottomed out chart can be. Right now, that doesn't mean that we're really going to go anywhere, right? We gapped it. We did this before, but this was probably a pre-pump in anticipation of this. This is the real movement. And the post-market action seems to be hot, dude. So this thing's probably going to gap up again. And then Vulcan. I mean, similarly, doesn't look too dissimilar to the asset, although quite different. This thing has not gone sideways for nearly as much. We had earnings on point. Okay. Stock split. And no more earnings until March 19th. For some reason, the daily time frame is saying that this is overbought, interestingly enough. So I don't know what's up with that. There is bullish divergence on the weekly time frame. And there is regular bullish divergence here coming off of the daily time frame, but that was 5 days ago, so whether or not that's played out, unnatural volume right now. For some reason, I don't like this one as much. We are making a new high right now, which that is pretty good. I would say that if we gap up tomorrow or start moving tomorrow, this thing probably does continue to push up. Especially because if it's an energy play, electric play, just like, and the post market has it at 462 right now. So this thing looks like it's going to gap up too. We'll see. You always got to be a little careful about the post market. You always want to come in and check that post market about 30 minutes to an hour before market open. That's when you really see reality settle in. Yeah, if this thing gaps open, it's probably going to continue running. So good eyes, and good for you, man. 409 on Vulcan, that's a good entry. And you got it at 25 cents on NXU. Oh, my dude, man. My dude. Hope you went big, dude. Gotta feed them kids, brother. All right, life's good, man. Okay, guys, with that, okay. Let's talk about, hold on a second. Guys, go follow me over on X. We're almost to 2,000 followers. Here we go. All right. So I reposted this. This is basically the best thread I've come across on the topic of the H-1B visas. And so I'll share my 2 cents because nobody asked for it. But essentially, Robert Sterling here he says he downloaded 5 years of H-1B data from the U.S. Department of Labor website, which is over 4 million records, and spent the day crunching it. I went into this with an open mind, but to be honest, I'm now extremely skeptical of how this program works. Here's what I found out. Okay. All right. He says, to start with, this program is massively popular with employers. The program has a statutory limit of 85,000 visas per year, but employers routinely receive approval for more than 800,000 applications per year. 868,000 in 2024, which is 10 times the statutory limit that's approved. All right. Contrary to what I expected, the average salary for an H-1B is relatively low, slightly under $120,000 this year. Given that much of the H-1B debate pertains to tech workers, I incorrectly assumed the average would be higher, but this is the beauty of data, right? He says here you can see that salaries are disproportionately weighted toward the lower bands. So here are the salaries, as we can see here. Less than, what is it? All right, so let's just go back to his numbers, which are better. 17% of H-1Bs make under $75,000, 21% are 75,000 to 100,000, 22% are 100,000 to 125,000, 15% are 125 to 150,000 dollars. So only 2.5% of the jobs are $250,000 plus. Which, if the argument is that we need more H-1B visas so that we can get the top 0.1% of tech of tech workers, you know, to help us win the AI revolution. Well, I'm very familiar with high-paying tech jobs, and those are $250,000 plus jobs. All right. So there's already a disconnect here. Okay. He says he roughly categorized job descriptions into computer software, IT-related roles, which is teal, and everything else gray. As we can see, the absolute lion's share is, of course, going to be the biggest one: software developers and applications, software developers, computer systems analysts, computer systems engineering and architecture. So, of course, all tech. And then all on the way down, right? So teal, everything in the tech world, everything else gray. Okay? No surprise. Basically, every role with 30,000 plus H-1B applications is a STEM field, with the exception of accountants and auditors. Most of them IT related at that. Okay. Look at employers real quick, with Cognizant Technology Solutions US Corp being at the top, followed by Google, Ernst & Young, Amazon, Microsoft, Infosys, Tata, Apple. Again, broken down, the teal are the IT jobs they're hiring, and the gray is everything else. All right. Analyzing the data by NAICS codes, we can see that computer systems design absolutely dwarfs everything else. 1.2 million applications over the last 5 years. Oh, whoops. As it turns out, these are all Indian companies that import H-1B tech workers en masse. Cognizant, Infosys, Tata Consultancy Services, Wipro, Capgemini, HCL, Componal, Tech Mahindra, and Infosys. All right. American multinational company, Indian multinational company, Indian multinational company, Indian multinational company. And this is them filtered by what jobs they're trying to fill: computer systems analysts, computer systems engineers, and architects. This chart here shows each company's average salary for each role. I've added a shaded gray band between $80,000 and $120,000 to highlight where the preponderance of salaries fall. Again, if the argument is that we're trying to recruit the top 0.1% of talent, this is not what you pay the top 0.1% of talent. Okay, this is entry-level tech. All right, this is the entry-level tech salary. I know it. I've had many, many, many friends who work in corporate America in tech. Peckham says, I'm leaving for the border now. I'm on 25,000 pounds a year. I'll learn to code on the walk up through Mexico. Good luck, man. Good luck. Mexico's starting to turn them away, dude. You missed your opportunity, man. You missed the Biden open borders, man. You missed it. You missed it, dude. If you wait any longer, all you're gonna find are machine guns at the border waiting for you. All right, the H-1B program isn't just Indian companies requesting visas for IT workers, though. The list of companies seeking visas for accountants is a who's who of the Big Four and other prominent accounting firms. Ernst & Young is crushing the competition with 16,000 plus applications. So here we see Ernst & Young, Deloitte, Pricewater, three of the Big Four right there, top accountants. And again, remember, they're looking for that $80,000 to $120,000 salary range. That's entry level. Okay. Ernst & Young also has the largest share of employers seeking visas for finance-related jobs, followed by investment banks like Goldman Sachs, JP Morgan Chase, and Citibank. Here are the other roles for which Ernst & Young sought visas along with their average salaries. All right. Top accountants and auditors, 16,356 applications for H-1B visas, average salary of $102,000. Computer systems analysts, 7,022 applications, average salary of $137,000. One sec. Sorry, guys. All right, sorry about that. Okay, where were we? Oh, I missed your Aurora Joe's over on Rumble. I missed your Kadena request. Give me a second. I'll take a peek at it here in just a little bit. I want to finish this. Google, not surprisingly, had 45,000 applications for software developers alone. And we're going to get to the conclusions here. Now, you can see where I'm going with this. A casual perusal of the data shows that this is not a program for the top 0.1% of talent as it's been described. This is simply a way to recruit hundreds of thousands of relatively lower wage IT and financial services professionals. America does need to be a destination for the world's most elite talent, but the H-1B program isn't the way to do that. I'm going to stop posting for now, but let me know if there are any other visualizations that would be helpful. If you made it this far, thanks for reading. And then I'll just add again, there already is, I guess to put my last 2 cents on this, there already is a visa application that is not H-1B, and that is the O1 application, I believe. And that is for the top talent. What I would recommend is that we get rid of the diversity lottery and we stop letting in, what is it, 50,000 people, 500,000 people a year in a random lottery. And we just start letting the people in who are the smartest, the best, and the brightest. I don't understand why we wouldn't run the country like a company. You hire the best and the brightest, man. So you need to let the best and the brightest in. Seems pretty simple. All right. All right, we will take that parting shot look at Kadena here, KDA. Okay, so I'm not gonna lie, Kadena not looking really fantastic, man. I look at the weekly time frame. All right, I see that it really did not make a new all-time high. Of course, it didn't even come even moderately close to its previous all-time high. This thing has just been down only. Now, of course, it has kind of been in this long consolidation. I mean, relative to its price performance since 2022, I mean, it really didn't do much. Now, it is possible that, you know, we're just priming the pump, but my general thoughts is that when I see coins like this, it's just like, why? Like, it doesn't make sense. Like you like, have you heard of XRP? Right? You know what I'm saying? Have you heard of Hedera Hashgraph? Could I introduce you to my friend Sui? Better yet, can I have you met my hot friend Virtuals? You know? And so I have a very relatively low opinion of coins that have not performed well in this cycle, because if they're not performing well so far, it's unlikely that they're not going to. That's why, for example, like I was holding a lot of Ampleforth, and I got the hell out of that. I'm getting out of Cosmos, right? So, but okay, a little bit more strategic, a little bit more technical on the daily time frame. All right, let's start off with kind of the time transformation. Or this is the reversal system. Let's get our Bollinger Bands back on. Price did wick below the lower boundary of 2 standard deviations away from the median here, our median EMA. We are in a bearish trend as denoted by the Bollinger Bands, but also kind of in the buy zone. We did have a time transformation buy signal back here on December 23rd. We are showcasing oversold conditions. All right. We are showcasing oversold conditions. So that's where we're kind of at on the tactical sense. We do have expanding volatility though, so we have not really entered into a period of consolidation such that we're likely to get a continuation of the trend so quickly. Moving on from that, we've also lost daily momentum. We did get that oversold signal on time transformation. We did get that little bit of a bounce, but so far rejection from underneath the momentum bands. And so again, going back to this simple concept that I laid out earlier, why in the history of everything are my EMAs not on this chart? Dear Lord. As I said, you know, when price does not have our daily, when price is not above our daily EMAs, there's just no possibility of having a trend like this. All right. And so looking back on the last time we entered into a bullish trend and then closed below and back tested our guppies as resistance, it led to this. Okay. That is a 70% drawdown. And for me, that's too big of a risk. It happened here where we had bullish momentum briefly underneath the 200 SMA. We dropped, we back tested as resistance, and we dropped and we dropped and we dropped. Now we have regained positively the 200 SMA, but we've just lost the daily momentum band. So I'm not really bullish on this thing until we're back above $1.11. And until then, I'm going to see, even in the best case scenario, a potential revisit of 71, 72 cents to kind of retest that 200 SMA from the top side down. Thank you, Oracos, or I can't pronounce that. I'm sorry. Araujos. Don't be insulted. Thank you so much for the support over on Rumble. I really appreciate it. Okay, guys. Other than that, guys, that is it for me. Again, reminder, guys, all annual and monthly memberships are 30% off the Crypto Trading Academy. You go to crackingcryptocurrency.com. First link in the description. Get yourself 30% off all of our courses, all of our automated strategies, all of our indicators, our private Kajabi community, much, much more. Use that coupon code SANTA at checkout. That's SANTA, all capital letters, SANTA at checkout to get 30% off. That's good until January 1st. Join the community, level up your trading game. If you guys want to go, that's all I got. Oh, by the way, go to the website and wait 5 seconds. And why is it not doing it? Oh, because it only does it. Hold on a sec. Let me refresh. Let me hard refresh. Okay, you're embarrassing me. But I promise you, if you go to the website, that's why Ben has set it so that it won't bug you all the time. If it, you know, if it knows you're a returning website visitor, it'll only show you once a week. But go to the website. There will be a pop-up, and you can subscribe to our daily Monday through Friday alpha report. I will keep you guys updated on everything important in the markets. I list trade recommendations. I list my strategies. I do all the things. The free version is not the unlocked version. That does require membership in the Crypto Trading Academy, but you will get the unlocked or the locked version, which is good, very good in and of itself, every single day, keeping you updated on everything you guys need to know. So definitely go in there, put in your email. I won't mark it to you. I will only send you that alpha report. So definitely go get signed up for that. Stay in the loop. Other than that, ladies and gentlemen, I will be back tomorrow at 12 p.m. Central Standard Time, 1 p.m. on the Eastern Seaboard, ladies and gentlemen. You love to see it. Thank you guys so much for all your support. You guys have been a fantastic audience, the best audience on the internet. If you want to help us grow, if you want to support us, please subscribe, like today's video. Again, we do this show every single weekday and we pour our hearts and souls into it. Join our free Discord. Lots of great stuff, lots of great ways to get involved. But other than that, if you have any questions, comments, and concerns, sarcastic remarks, hot stock tips, and or death threats, please leave them in the comment section down below. Be good to one another, and I will see you guys tomorrow. Trade safely. That was the wrong button.